Good afternoon.
Hi, Asim.
How are you, sir?
Nice to see you.
Same here.
कभी physically भी catch up करो, sir.
Sure, I was wanting to come to your office. I'll catch you offline on this.
Yeah, looking forward to that. That'll be nice. It's been long, Asim.
Sure. So we'll start in about 5 minutes. People are still logging in.
No problem.
Yeah, thank you. We'll begin, sir.
Hi, Ashim. Yes, we can begin.
A very good afternoon and a very warm welcome to you all. Ladies and gentlemen, on behalf of the Confederation of Indian Industries, CII, and our knowledge partners, ANAROCK Group, I welcome you all to the CII Real Estate Knowledge Session on Tapping the Consumer Beat. Ladies and gentlemen, this is also the release of the CII and ANAROCK Consumer Sentiment Survey of H1. And to begin with, may I request the chairman of this knowledge session and the chairman of ANAROCK Group, Mr. Anuj Puri, to please deliver the opening remarks.
Thank you very much, Asim. It's a pleasure to be addressing this esteemed gathering. Thanks for putting this together. Today, we're also going to be releasing, as Asim said, is the CII ANAROCK Consumer Sentiment Survey report for H1 2022. It is very, very exciting what we have seen, how the customer profiling, thoughts, preferences have changed as we are emerging from the pre-COVID to COVID to post-COVID era. And towards the end of this session, my colleague Prashant Thakur, who heads the research, is going to be revealing the analysis of the report. I have a simple task today. I'm going to do two parts. One is really addressing the sort of this gathering on tapping the consumer beat. What we are expecting out of that. And the second one, a lot more exciting. I'm going to be interviewing Mr. Mohit Malhotra, who is the MD and CEO of Godrej Properties. He's going to be logging in. But let me first begin from the theme topic, tapping the consumer beat. So, clearly customer is the king. We've known this for a very, very long time. It is an age-old mantra that customer is the king. For real estate, it is no different. That customer continues to remain as the king, whether it's the product offering, whether it's the facilities, whether it is the amenities or the services, the customer has to be kept in mind. Today's buyers are really much more discerning and than before. Gone are the days when they would take everything that you would give it to them. Today, the customer, wants that extra time, wants that effort, wants the identity, to before they purchase the property of their choice. And this is what we're going to be talking about in the CII ANAROCK knowledge report on the real estate consumer sentiment. There are sort of 6 or 7 trends that we have seen in how the buying behavior has changed from these customers to pre-COVID and now post-COVID. Those 6 or 7 behaviors are, first, we're finding them becoming very, very, very tech savvy. Nearly 85% of home buying journey is now starting digitally with advanced technology tools. Can you imagine? I mean, this used to be about 30-35% pre-COVID. 85% of the home buying journey is now through digital. At least the start of this is digital. The second we found is the power of social media. We've seen this in the COVID. Clearly businesses on the digital space, what they were expecting would be delivered in 2030 on digital is getting delivered in 2020. We have covered a decade during this COVID time. I was reading in our report, it said is that the average Indian now spends nearly 5 hours on their phone every day. And what is even more interesting is that the increase of 1 hour from 2019, i.e. the pre-COVID year, to what it is now, 1 hour more we're spending on the phone, and clearly a lot of that time is being spent on the social media. The third, we are seeing the behavior changes that a number of these customers are wanting community living. So they want to be in that community. They want real estate projects which are more gated communities, which have more better facilities, which have community center, physical facilities, mental well-being, improved infrastructure. So they're not preferring as much standalone small buildings. They're preferring more communities because they just feel there are more facilities, both physical and for the mental well-being, and there are more amenities and the security is better. The fourth one, and this we have seen right through the COVID phase as well, that consumer is wanting bigger, better, larger apartments. The unit sizes, have increased by 24%. from end of 2019 to H1 of 2022. Can you imagine? 24% increase on an average in the size of the apartment preference by the buyer. So previously it used to be 960 square feet at the end of 2019. Today the preference is 1190 square feet. So clearly a 24% increase in the area. The fifth is safety. And this is a big one. Safety is really the new luxury. So whilst a number of developers are putting smart technology for the home buyers, but what the home buyer is also looking at is, how that safety, not only from a security point of view, is ensured by putting in state-of-art security, systems or sensor doors, but also they are looking at it that how sort of no touch, i.e., on the elevators, they don't want to touch it. It has to be voice modulated, how these high-speed elevators, the entire framework is a lot more hygienic. And that is what the customer is really looking at it, not only on the residential side, but even on the office and the retail side. Last 2 points that we have seen that have emerged during this COVID phase is that the developer credibility is critical. The share of the listed and the leading unlisted developers used to be about 17% of India's residential sales in FY 2017. That has increased in FY 2022 to 29%, so nearly double. That means that clearly this space is getting consolidated with credible developers, not only listed, but even leading unlisted developers. So really tier 2, tier 3 developers are the ones who are getting consolidated, and it is becoming evident that the home buyer has become very cautious and is preferring purchasing property from credible developers. They believe that these credible developers have huge financial discipline, have accountability, have transparency, and their delivery is assurance, unlike some of the smaller developers where they have a bit of an issue. And the last one that we have seen is really the rising demand in tier 2 and tier 3 cities. Work from anywhere is supporting this. The housing demand from tier 2, tier 3 is on the rise. And clearly this has been pretty exciting, very interesting from the prospect of the survey that Prashant and his team along with CII have done it to be able to put it together. The various facets that we have seen change from pre-COVID to COVID, and as we have now emerged out of COVID, the changes in these. With this, Asim, if I have your permission, I do see Mr. Mohit Malhotra here. If it is okay with you, then I do want to go into this exciting part of the dialogue with Mohit. It's not only very rare, but also very difficult to catch Mohit. I can personally catch up with him, but to get him on the screen is very, very tough. I want to take this opportunity of thanking Mohit to come in this afternoon. We all know how busy he is. If it's okay, I do want to go into the rapid sort of questions with Mohit. We have about 15-20 minutes before the panel starts at 4:35. And here is the introduction of Mohit, who is the MD and CEO of Godrej Properties. Obviously a very, very successful individual, very powerful in his own right. Clearly the way that he has taken the Godrej Properties Limited to a very different height proves the delivery track record and the various recognitions that he and the firm has been able to gather. It is, indeed the largest listed real estate company in India by sales, and very, very warm welcome, Mohit, to you on the CII ANAROCK this afternoon's show.
Thank you, Anuj. Real pleasure to be here, and thank you for such a kind introduction. It's always a pleasure to have these kind of conversations with you. So and I really look forward to this.
We have 20 minutes. I have 10 questions, out of which 6 are official, 4 are personal. And for personal, I'll be a little bit quick. I know how reluctant you are in answering personal questions, but you are on the spot with me today. So we'll get some sort of answers from you on those 4 questions. But the first six official questions that I want to ask you is, first is, clearly we've seen a huge amount of consolidation that has taken place over the last 2 or 3 years. Is this consolidation come to an end, or you think is that this is an ongoing process?
My view, Anuj, is that this is an ongoing process. The industry has fundamentally changed over the last few years. And I think one big or two big factors which are driving consolidation and which are a very long-term trend is it has moved from a low equity business to a high equity business. So, access to equity capital is actually a very critical aspect to be in this business. And post RERA, I think, the dynamics of this industry has completely changed. So, not everyone has access to equity capital because you need a certain kind of corporate governance, you need certain kind of, professional setup to be able to attract equity capital. So I think that is a factor which is here to stay. And without access to equity capital, it's very difficult to, grow in the business in future. So that is one big shift. The other big shift is, the industry has fundamentally changed. Back in when I joined this industry back in 2006-07, the source of competitive advantage in the industry was access to land. So anyone who had access to land, who could get approvals, was the king in this industry. Today, it is no longer the case. I think today, anyone who has access to customer, which is essentially brands, is the way, you could be successful in the industry. So again, brands are not built in a day. These two factors are something which are going to continuously drive consolidation. And I think industry is getting more and more regulated by the day.
I agree with you. Mohit, two things that you and I have discussed earlier is, one is this, China real estate, particularly the housing sector, it was doing exceptionally well and today facing a crisis. Is there a lesson for us to learn in India? Or do you think that there is any risk for India to follow the same path?
Yeah, I actually, incidentally went to China before COVID. Me and the entire team actually did a study trip to China, and we visited all the large players like Vanke, Country Garden. Now, the scale of China is very different from India. So, the Chinese developers like Vanke and all do $100 billion of sales a year.
Wow.
Despite, all of us saying Godrej Properties is the largest company, we are doing barely $1 billion of sales. So, the scale is phenomenally different. So there is no comparison. The other is, the most of China real estate actually grew because of government support. And one can actually, when travels in China, one kind of experiences a thing called ghost towns, where you really wonder, are these places really getting occupancy? So I think, unlike China, our is not a government-backed, industry. Ours is more demand-driven industry, very fundamentally driven. So I don't think we are going China way. The other positive aspect for India, which in hindsight is a great positive, is we have gone through a very, very bad down cycle in the last decade, which has cleaned up the system. All the developers who are present today are having very strong balance sheets, which is unlike what is happening in China, where developers have huge debt, crisis is going on. So I think fundamentally very different market scales are very different. I don't think we should be worried about that. I feel we are now in probably the best period in the decade for residential sector in India, and extremely upbeat and optimistic about the future.
And what the next one is related to this is, you're not nervous with the way interest rates, certainly for the home loans, are going. Would it at any level have an impact on the demand?
See, interest rates are rising globally. It has already risen in India, but still, if you look at historical levels, it is at a much lower level than we have seen interest rates in past. So I think people are used to having mortgage rates at 8-9% in past. So it's not something where a consumer is suddenly feeling, unlike US, where a 4-5% of interest rate is unheard of. So it's never been in history that they have seen such high interest rate. Our consumers have seen this for years. And also in terms of affordability, Anuj, the prices, if adjusted for inflation, has been at a historical lows, thanks to the decade-long down cycle which we have all experienced. So I'm not overly worried about. Of course, any rise in interest rate would have a dent in demand, but would it fundamentally impact the cycle? I really believe it's not going to happen. I think there are many factors, affordability at all-time best, and also a structural shift in consumer outlook to homes as an asset class. I think these two factors are going to help us tide over any of these short-term shocks which might come in future.
My next question is around tier 2, tier 3 cities. Do you think there is scope in tier 2, tier 3, or as Godrej Properties, your preference will continue to remain only focusing on tier 1?
No, I think there is a huge scope, across India. India is such a large country. If you look at Chinese companies, which we were just discussing, some of them are in 100 cities, some are 300 cities. So clearly, I think our cities are going to become mega cities, and tier 2 cities will gain strength. I think having said that, as a company, our strategy has been to focus on tier 1 city, because, even despite being market leaders, the share of a market leader in the tier 1 city is not more than 5%. Huge scope, given what is happening in consolidation, huge scope to gain market share in tier 1 cities itself. What we have done, Anuj, is, we have started our journey in tier 2 cities. We have started doing low-rise developments, plotted developments in tier 2 cities, gain a foothold, understand consumer demand, and probably, with passing time, as we see the consumer demand going up, we would already be present to take advantage of that.
I agree with that. That's a nice one. My last, before we change gears and move a little bit more personal, is Mohit, on the customer preference change. Given that we were earlier talking about the consumer sentiment survey report that CII ANAROCK is releasing, have you seen change over the last decade, not necessarily just pre-COVID to post-COVID, on the customer preferences?
Absolutely. I think today, consumers are much more intelligent, cautious, and aware of what they are buying. Back in the days, we have seen where, people used to just queue up to buy homes as if you're buying, vegetables and not thinking through. Today, consumers spend a lot of time going through the floor plans, understanding the master plan, what's going to be the product, how are you going to develop it. And I think it's an extremely positive trend. I see consumer activism as a very, very positive thing for the industry, because it keeps us on our toes. It forces us to become more efficient as a company. And I think that is the biggest positive of this. I think this is something which is going to continue. Consumers are expecting a better quality product from all of us, and are going to take us to the task if we don't deliver that. So I think that's a real change.
And Mohit, I've learned something new this afternoon, that consumer activism should be looked at it positively, because it keeps you on the toes. And so beautifully put it up. Many of us look at it, as an irritant, or perhaps something that you could wish it away. And here you are saying is actually look at it positively, that it actually tells you what the customer is wanting and does, keep you and the teams on the toes. But I'm going to change gears. Tonight, if you were to have a wish to get on a dinner party any 4 people in the world, who would be on your invite list?
Wow, that's a real tough one, Anuj. The 4 people on dinner party, I think
Well, one should be a Bollywood actress, Mohit, given your personality.
Yeah, I was thinking of naming Shah Rukh Khan because I really admire him
Nice.
for what he has done. I like people who are self-made and who have done big in life. So I think clearly he would be definitely one. Also, really look up to people who have founded large organizations in their lifetimes and achieved big things. So I think Blackstone chairman is definitely someone I would love to engage and understand and speak to. Apart from that, yeah, I can't think of many more names, Anuj, but yeah, I think definitely the friends and families are the ones I might call after this. Tough question to ask.
Yes, I know. I'm sorry to put you on the spot. My next one is, what is the most dangerous trait in a leader's career?
I think many, if you ask me, but personally, one couple of things I have really consciously tried to avoid. I think one is egocentric behavior. It's a very dangerous trend. If a leader tries to be the one who outshines everybody else in the team, I think it's a very, very dangerous trend for any leader. I think also being selfish and being, I would say not dishonest, but not being authentic with your colleagues or your relationships. I think these are really damaging behaviors to have as a leader. Many more I can say, but I think really the top two in my mind is being. I think the opposite is being humble and taking everyone along, and of course being extremely authentic and focus on relationships. I think these are the two critical traits to have.
No, absolutely. And then Mohit, just continuing with this, I have seen your career, grow, and lots of people, we are nearly 150 people on this call. They've seen how you have grown. My question is, how do you continue to grow and develop as a leader?
Personally?
That's right.
Yeah, I think for me, I think one thing which I, do, and again, this is something with feedback I receive from my own juniors is I love to learn, so I really spend a lot of time learning about new things. I really, love to read. So I have a phenomenal collection of books on my Kindle, and every time I find something new, I just kind of download it and read it. So I think that really is curiosity and, trying to learn and also take feedback. I really like to take feedback from everyone I meet and, figure out how I can do things better. Many people have remarked that when you started your journey as a CEO and when you are now probably towards the end of that phase, it's a complete transformation on how you have engaged with the team. And I think it's only because of learning and taking feedback and course correction as a leader. I think that these are few things, Anuj.
What is one decision you wish you did not make? What is one decision that you wish you had not made?
Honestly, I really love, I never regret any decision which I made. Every time when I have made a decision which looked extremely, I would say, not right at that point of time, turned out to be the best decision at hindsight. So if I give you an example, I left Etikane to join real estate in 2006. And I started with a small company. I joined Unitech that time, and I left a very, very comfortable company, a great multinational, and I joined a startup in a very uncertain industry. And many people told me this is absolutely a bad move. This was in 2006. And then what happened was the company went through a real tough time in 2009. The crisis happened. Things were very, very bad. A lot of us were not getting paid salaries and all. A lot of people came to me and said, look, we told you it was a bad move, and you really screwed it up. I joined another fund after that. Within a year, they packed up their bags in India. And again, I was jobless. And again, people came and told me, look, we told you you should not have done this. And I just that day felt, probably they're right. But look at the hindsight, all those forced me to, come to Mumbai, join Godrej Properties, and, I had the best dream run in the last 12 years. So I think all these things which, people, I never regret, honestly, I never regret any decision. I think every decision is well thought out, and sometimes it plays out well, sometimes it doesn't, but everything is a great learning opportunity, Anuj.
Beautiful, beautiful. My last two questions and I'll let you go. What is your number one priority for the business right now?
For me, the number one priority is, really get on top of product and, consumer, really deliver extraordinary product and service to our consumers. So I think if you really ask me, the one thing I would want us to get critical as a team and focus on as a team is deliver extraordinary products for our consumer and provide great service. After that, we've just started a property management company called Godrej Living. So we would now provide, service to our customers post handover. So I think that is for me the most important part for us as a business.
The last one, Mohit, and it says, the question says like this: the nation wants to know.
This sounds like some kind of a newsroom now.
What next, Mohit?
Yeah, I think I had, thanks to, grace of God, it's been a fabulous journey. I've had a great experience. I've been working with Godrej Properties for 12 years, 5.5 years as MD and CEO. So it's been an amazing dream run. And I also asked myself, what's next? And then the answer to that was, start your own venture, get into an entrepreneurial venture. And really, I do believe, Anuj, that this decade is going to be an extraordinary time for, residential sector in India. And I really want to build, the India's first professionally owned and managed tech-enabled consumer-focused residential business. So I think that's my vision. And I'm just doing a baby step in that journey, and looking at all the panelists now and seek their support in my journey. So that's the vision.
Afterwards, you please explain to us also what exactly it is that you meant with that long statement of yours. I wish you the very best, but let us know.
I just want to do what Rustomji is doing, woman. Nothing more, nothing less.
Come join the brigade, my friend. Join the brigade.
No, fantastic, Mohit. Thank you very much. I mean, there's a lot of learning. I'll just try and quickly sum it up. Clearly the Indian real estate seems to be in pretty good shape. There are challenges at a global level, but it does appear that, at least the Indian residential real estate is going to hopefully buck the trend, or even if it gets caught out, it's not going to be as severe. Clearly, the way that you defined is that consumer activism should be looked at it positively, not negatively. As a leader, the biggest folly can be the becoming egocentric, and that is one thing that one should avoid. Love to learn is one of your biggest strengths, and clearly you're focusing a lot more as a firm on product and service, and that is fantastic to know, is that product has now taken a meaningful place in this. And we learned from you what next for Mohit. So we will be watching this space keenly to see is 1st January, which is what I think is the new date for your new avatar, to see where you go. We have the next panel waiting in here, Mr. Baman Irani, who's been on the road trip, trying to raise a huge amount of capital. I don't know how much of that he's going to talk about, or he may not be able to. And the rest of the panelists, Sanjay Dutt, Arvind, Mr. Joshi, Santosh is going to take us through the next part of it. But Mohit, thank you very much. Absolutely enjoyable to discuss with you. And we wish you all the very best for your new venture, the new endeavors. And we know that you're going to do exceptionally well. You have the blessings of the full industry with you. A majority of the veterans are here, and I'm sure they're wishing you all best of luck as you get into the new journey.
Thank you, everyone.
Thank you, Mohit. With this, I'm going to hand it over to Santosh for him to take us through the next part of this session, which is beautiful panel discussions with the leading experts in the industry. Over to you, Santosh.
Thank you, Anuj. Thank you for the wonderful session. As you said, we have got veterans of the industry are in the panel. Before that, I must thank CII for organizing this event along with ANAROCK. It's a great platform to discuss the main topic of this event, which is tapping the consumer beat, fundamental to develop relevant future. So we got eminent panelists to discuss this topic. ANAROCK has been regularly partnering with CII to conduct the customer sentiment survey. Majority of the point which has come out from this survey has been given as a context setting. And let me share some of the key takeaways from these survey report. Very importantly, the pandemic has reshaped the Indian residential real estate sector. The consumer preferences for real estate investment are back to pre-COVID levels. On the back of recovery, the home ownership is once again a top priority for the people. Housing demand has shifted from compact homes in the city center to larger homes in the peripheries. Nearly 60 to 70% of the launches across the top cities now comes in the peripheral regions. Also, there is a big rise in the younger generation as a sizable chunk of home buyers are buying today. Very interestingly, 53% of all the home buyers are aged 45 and below, which is basically Gen X and Gen Z generation. Also, buyers have, like Mohit mentioned, buyers have become more astute and more demanding and look for quality, comfort, convenience, value for money, deadlines, timelines. They have become much more demanding. The pandemic has also triggered the need for bigger and more functional homes. The unit sizes have also increased, before the COVID from, around 960 square feet to 1190 square feet in Q2 22. I think the biggest boost for the sales is that the 40% of the Indian consumers are willing to buy a home just in a quickest point of time. There are the people are not waiting for site visits, which has become a great tool for many of these companies to sell their product. And apart from these points, at the end, our research head is going to release the report, and he's going to make a brief presentation about the content of the report. Just to introduce the panelists, we have got, as I said, we have got very eminent panelists. Mostly, they're all from Mumbai. I'm sitting out of Gurgaon at this moment. We have got our veteran Shrikant Joshi, CEO, L&T Realty Infrastructure Limited. So my good friend Sanjay Dutt, MD and CEO, Tata Realty and Infrastructure Limited. Boman Irani, Chairman and MD, Rustomjee Lifespace. And we got Arvind Subramaniam, MD and CEO of Mahindra Lifespaces. So, so first question to Sanjay. All the welcome to all the panelists. My first question to Sanjay. Sanjay, you have been a developer for all the assets classes. You come out with a product for all the assets classes. So my first question to you is, what is the outlook, considering we have seen post pandemic now after the COVID-19. So what are some of the trends you are seeing in all the assets classes which is relevant today?
Thank you, Santosh. Pleasure to be in the company of all the veterans. I think the biggest driver of real estate demand are the jobs and the confidence in the economy and how the economy is doing. The second is really the investment climate, because real estate does attract a lot of capital from overseas. Also, given the recent history of the sector, what do lenders think about our sector? What do various government bodies think about us? Because we were starved of perception, deficit, least trusted as a sector, and that's how RERA came about. So given the recent history, I would say all the real estate segments, despite COVID, which caused a huge setback to the commercial sector, whether it's shopping center, hospitality sector, or indeed office sector, has bounced. So that's for real. Even during 2020 and 2021, we saw 25 million square feet net absorption in India, while less than 3% of the population was coming to the office parks. So that's commendable. I think 98% was a rent collection. On average, we saw 8% rental growth, which is not bad given the fact that we were going through a COVID period. So that was very reassuring. And we did a platform deal with a foreign investor during COVID, Santosh, for growing commercial business. So you can understand what I went through during those times to achieve better value for the company, at the same time assure the incoming investor that what lies ahead in terms of return for them will be very promising. But I must say that both investors and the developers were able to see the results. In fact, there was at the beginning of 2019, when we did 49 million square feet absorption in office, there was a projected supply of 65 million square feet. So a lot of residential developers who were not able to sell residential wanted to do commercial, Santosh. And we were kind of fearing a oversupply in commercial. With the COVID, that supply came down to 35 million square feet. So clearly the commercial organized players have less competition. So that's really important for us, and therefore, and now return to office and all the debates about whether you're more productive at home or you're in the office. I think those debates are done and dusted. Everybody's returning home, which is their office home. I call it, that's your home for work. And I think we're already around 40–50% occupancy in most parks. Some multinationals are pampering their employees a bit right now, but even they are giving signals by December they will actually return. So that's commercial. Residential, clearly the world was focusing on affordable housing and ticket size. And I think as long as you are able to fit in your product, you could sell. And if you were outside of those ticket sizes, we were struggling. I think what we have witnessed is, in addition to what you've already said about residential and what Mohit said earlier, larger, more breathable, more sustainable, and much higher quality, and a lot more aspiration attached to housing has returned. So it's become extremely important for all of us to repurpose our developments, which were already on the design stage, and add certain amenities which will appeal to the incoming, given the background that they all went through. For example, Santosh, we were the first one to come out with clinics in our residential complexes. So during COVID, a dedicated doctor in the society was a big help. And we had given a residence to the doctor in the society. And that really worked quite a bit as a model for us to kind of provide services to the customer. So that's really back. I think the launches in residential were also low in the recent history. And therefore, inventory came down. And therefore, now we are set to scale. In shopping center, Santosh, you know, the people are gearing up for a retail REIT. And it's a great opportunity. I think most of the retailers have witnessed very high demand. So organized as well as online, both are doing very well. So I think that will grow. Hospitality has bounced. So there is no segment. I would say for the first time in my recent 10-year history, I've seen all the graphs pointing upwards. Only problem is, so is the cost of construction is pointing upwards and the cost of capital is pointing upwards. So other than that, those two, everything else seems to be good.
So Sanjay, you mentioned about the absorption coming back to pre-COVID level. Considering on the back of some of the good positive trends which we had seen. Considering that now the anticipated recession in US, do you see any kind of an impact on the office absorption in India?
Santosh, it does impact in the first 12 months. Most corporates go into coma because there is absolute freeze on hiring and decision making. But after 12 months, Santosh, what I've seen over the last 20 years in commercial, the pressure on cutting costs comes on corporates. And that's where India scores again. And the good news, and I call it the upside or the downside, the good news is the dollar has strengthened, so we become more cost competitive. And we have a scale. I have every reason to believe that we will only bounce after this 6 months lull that I witnessed because of recession in US. Most people will not work in the month of November and December, as we know, and January. They will return in February with mandates to expand and grow in India. By that time, the occupancy in office park, Santosh, will be back to 70%. So there'll be a rationale also to scale.
Okay, thank you, Sanjay. Shrikantji, the festive season just started, and each year we see sales booming during this time. And considering that, what is your outlook on the current year festive season? And how can the developers leverage this period to have a maximum impact on sales?
Yeah, thanks, Santosh, and glad to be here. First, I think most of the points have been made by everybody. Residential is on a rebound, and nicely, this is a end user driven demand. Our housing penetration is so low that people still want the ownership. Housing is a very big emotional issue for most people. While the affordability, what is best for last 20 years or so, and it has gone up in the past, but still in a good range as of now. So we do see a lot of residential demand which has come back, and also the consolidation of the sector. So the branded players are getting the maximum advantage of this consolidation. So they see a better demand from their projects. And obviously, in all festival seasons, the sales used to be good. We do expect this to be good as well. What can the developers do more? As Sanjay has rightly pointed out, the fact is the cost pressure has been very high. We've been passing on some form. And so long as we don't become too greedy to pass on too much, I think it should be possible to sustain this demand. Some point which Sanjay has mentioned in terms of amenities and the housing sizes, which definitely people have seen, particularly in city of Bombay, with husband, wife working, even kids going to school online. The house sizes became at least 4 separate workstations was a minimum requirement in the houses. So these are some of the 4-5 elements. If we do take care, I do believe the housing sector will do well in this festive season. The US pressure remains. If the interest rates become too high and too fast, that's a thing we all have to face. But other than that, I think it's in a good space.
Shikhaji, you touched upon consolidations. Do you think that the consolidation phase is over, or will this continue for a longer period?
I think the major part of it is over. Either in IBC or NCLT or X or Y, or whichever way. The 2 years of pain of COVID, which resulted into higher interest for most people, is there. The resolution of that is not yet over. Even in RERA, you see there's so many projects which are stalled and there's no resolution to that. I think there are many of these developers. The previous mindset was that if you had a land, you could become a developer. Now, many people feel, no, we are good on the land side, let's remain on the land side and tie up with a partner who can pull through a project in a difficult phase if that so appears. So my guess is 60-70% of consolidation has happened, but 20-30% will happen more as we go along. Finally, there may be 10-12 good brands across the top 6 cities at least.
Okay. So, Bowman, you have been very active in all the industry forums, and you have been highlighting many issues of the industry. I just wanted to come back to you on the RERA. How effective the RERA have been across India, and more specifically, you are reading about the northern market, especially the Noida and Gurgaon, considering that it has been RERA have been effective for the longest time now. And in your opinion, what do you think? How effective they have been, and what are the changes it has been able to bring into the developers' confidence?
So, Santosh, first of all, thank you very much for inviting me on the show. I want to take up one more issue. You cannot call us veterans. Veterans means we are on our way out. We're all startup mindset. Yeah. We all have to be, totally agile to be in this business. This business keeps us on our toes.
Veteran in the form of inexperience, not not from the perspective of age.
I want to learn every day. I've got all the gurus on the screen with me. But let me tell you about RERA first of all. Many years back I had been to Singapore before RERA was introduced out here, and I remember going to a tower out there and looking up these apartments. And I don't know if you know, but they have so many details down on that RERA website. And coming from Mumbai, I didn't know all of these things. So I went in over there. I said, I want this changed. The usual, what will you do? So this guy said, no, we cannot change this apartment. This is exactly how it is. And this is, I cannot make any changes to this. So if you like the furniture, you buy this apartment. If you don't, then you have to go across the aisle and go to the other side, or we have a second tower and we have these kind of flats, etc. So you know what we do out here, right? We just change one flat and join two together and stuff like that. I think even at that point of time, Singapore did not tolerate or allow this kind of changes. I think RERA is evolving. As far as India is concerned, we are nascent stages. RERA, of course, is something that came into or was because we believe that the customer should be protected. What did happen for some time as new bodies get formed, they thought that their job was to penalize and, just bring the hammer down heavily onto the errant developers. I think the focus now has again moved towards seeing that the consumer gets his due or gets what he was promised. And towards that, at least I can speak about RERA. They play a very active role. Some of the consumers seem to say that they are taking too much side of the developer. I think what they are doing is actually right, and in the interest of the larger developer fraternity, larger consumer fraternity. And I can give you an example. If one consumer is asking for unnecessary amount of interest or whatever, or saying that the project should be penalized badly, the authority realizes that the larger good of the people will not be served with that. So they are kind of taking decisions which then get chastised by certain groups. But I think in time to come, all of us will realize that what they've done is right. I have zero idea of the North, except for the fact that that was probably the largest bed of development that took place in the city, in the country. And when such a large bit of development takes place, for 60, 65 years, development has been progressing, and certain parts of the country have been doing more, certain have been doing less. But the boom that took place, I mean, so many years back, Mumbai and MMR also saw a big boom where we had, if you see the kind of slums that proliferated out here, they were because the organized housing sector could not keep up with the supply, right? So North kept up with that, or rather, at least the promise to keep up with that was huge, with every developer doing, crores and crores of square feet. They could not live up to it. Obviously, there were hassles. I think it's time to roll up our sleeves and see how, other developers can step in, or any kind of SOPs can be given. To give you an example, I mean, just 1 second moving away from RERA, what Maharashtra did last year was commendable. There were more than 200 stuck projects. I don't know, Joshiji, you'll know, in the Dadar, Matunga, Mahim belt, all these smaller redevelopments were stuck. And
Correct.
Maharashtra government said they stepped in with 50% of premium charges, which actually gave life. And the commissioner has actually gone on record to say that almost 200 projects have gotten life because of the reduction of premiums. So one has to look at, various solutions to it. I think the North, I mean, like I said, I'm not the champion out there, but Maharashtra has seen beautiful amount of changes. I use RERA very positively. I believe a customer who, would lose his money in real estate by virtue of the project getting stuck is bound to never come back to this, business or industry or as an investment. But a consumer who gets his home, I mean, he might make 10% or he might lose 5-10%. It really doesn't matter. He will stay in the game. He will be there. He'll come and buy his future investment if he can, or he'll at least use the home in a way that, is good for him. So I look at RERA very positively. I think it should have come in much earlier. I believe that earlier the trajectory was like this. They were trying to grapple with too many things. Now with the maturity, they've started choosing their points and, working on what is relevant. I think it is going to get more and more disciplined, and we will have to be more and more compliant. But that's all part of the game. I'm happy for, those developers of us who can take care of all the compliances and grow with the market. Like Joshiji said, that, it is the branded or the recognized or the good developers that are seeing a larger part of the pie come in. I'm very happy with the way RERA is moving ahead and the kind of changes that they're making, especially MahaRERA.
No, I hope everyone follow the same MahaRERA guidelines. Arvind, very interesting point which I want to raise right now. Considering there is an inflation and we are seeing interest rates going up. With the interest rate going up, there has been a shrinking of pool of saving with the customer, which is basically reduction of disposable income with the consumer or the end user. Considering that, do you think that the demand for the houses is going to go down, and what impact it will have on the prices of the developer, which is on the upswing right now because of the increase in the cost? But if the disposable income of the customers are going down, how it is going to impact the demand for houses?
Thanks, Santosh. And like everyone else, pleasure being on this panel. That's a very complex consumer behavior question. And what we are seeing is the way consumers think about home purchase is not just as a linear decision process. There are many factors that play into it, and particularly coming off a period, like many of the other panelists spoke, of being confined in the home 24/7, through the week, through several months and of 2 years. There's a new realization that families have gone through a moment of epiphany on what the home means to them, not just in terms of space, like having multiple workstations at home, but even just aspects like health. The fact that your living conditions have a very big bearing on your health outcomes. When we talk about health, we often talk about diet, exercise, meditation. We don't necessarily use housing or living conditions in that same breath, but actually they do. And there's enough evidence now to show that well-planned homes with good ventilation, good sanitation, etc., have a remarkable impact on standard of living. So when consumers are approaching this home buying decision, firstly, most families are planning for this for 2 or 3 years at least. It is not an impulse purchase. So then they're not looking to time the market. They are looking for the product that meets their needs. And yes, mortgage rates will go up and down, inflation will go up and down, disposable income will change a little bit, but they're planning for something that they will consume over the next 30 years. I often, react to when wealth managers, analysts keep talking about real estate or residential apartments being an asset class and putting it in the same category as mutual funds or equity or debt, and talking about why it's not a great investment because the returns are not great. I think we're doing ourselves a disservice. Residential apartments are a 30-year consumer durable product. Families consume homes, they don't only invest in homes. It so happens that it has a negative depreciation, which is great. So if you think of it as a 30-year consumption product, your entire lens of how you evaluate the purchase changes. Yes, inflation is going up, but incomes are going up even faster. We're reading a lot in the papers about the great resignation, how people are jumping jobs with significant increments. I saw a headline article in the ET earlier this week, which talked about double-digit increments forecasted for next year. So at least with the salaried class of consumers, there is still a significant gap between savings and the inflation that is eating into those savings. We're also coming off 2 years when discretionary spends were at all-time low. There was very little travel, there was very little entertainment spend, etc. So the pool of savings in families' hands has increased. You have to couple this then with aspects like, again, Srikanth and Sanjay touched upon it, cost inflation, which has been horrendous on the construction side. Every commodity, steel, cement, plastics, aluminum, copper, everything has gone through the roof. It's moderated a little bit in the last few months, but still well above pre-COVID levels. So how do you kind of tackle that? How much can you absorb? How much can you pass on? And what we are trying to do is moderate the impact of that cost inflation, construction cost inflation, through 3 or 4 different levers. The first is classical, go back to the drawing board, value engineering, try and squeeze out cost from design, cost from value of what you put on the table. The second is procurement. Can you consolidate purchases? Can you plan for longer periods, bulk buying, longer term contracts, etc. The third, in our case, and in the case I'm sure of many of my fellow panelists here, is put cost of capital to use. Many of us have the advantage of being able to borrow at lower cost than some of the smaller developers. So if you have a 200, 300 basis points advantage in your cost of borrowing, how do you put that to use in terms of better payment terms to vendors, better financing terms, the trade-off between capital versus labor, and aspects like that. And then the residual is what you pass on to the customer. So while cost inflation has been roughly 12 to 15% on the cost of construction, what we've ended up passing on to the customer more often than not is the 4 to 5% kind of range. And that I think the customers have absorbed. We've seen the trends, that much of price cushion has been absorbed by the customers. So I think, all in all, I've given you a bit of a long-winded and multi-pronged answer to your question, but it is a complex question which warranted kind of looking at it from different angles.
So basically, in order to protect the demand, I think what is important is they bring in the efficiency from all sides, so that even if there is a rise in inflation, we'll be able to control the prices. So Sanjay, what we have seen now as a demand driver before the pandemic was, there was certain trends which has got implemented and which really boosted the demand. Do you think these will continue to define the product and market, or do you envisage some new requirement or pain points of the customer that would need to be addressed to going forward?
Santosh, I think the developers will continue to evolve. I used to make a statement earlier. Traditionally, this sector, especially the developers, have always made observations on the supply side. They know which developer is doing what, and that's how they design, and they jump into the same game, right? I think the developers have evolved. Now they're looking at demand for the first time. Even today, there is no report which can tell the developers that in which city, which typologies and which price point, The demand is how much? There is no clarity. I think that's the biggest thing that developers are battling right now, because we don't want to again land ourselves into a situation where we overbuild or wrongly build, because repurposing is difficult in this business. So we will continue to evolve. Santosh, the answer to your question is that this will be a learning. At the same time, because of cost pressures, we're trying to bring in efficiency in our business, exactly what Arvind said. Now, at the same time, we have to also see how do we compress the project cycle. It sounds like a cliche every time we look for somebody to blame and we say the government does not give us approval. But the reality is this sector has improved on every scale. The question we need to ask, has government improved its functioning? Bowman touched upon RERA being slightly more balanced in its approach, especially Maharashtra RERA. So that's where the struggle is. I think the developers are trying to balance their product and positioning of the product, as long as they're able to deliver quickly, turn around quickly, sell quickly, and make some margins out of the project, which otherwise seems like not so easy to make. That's a real challenge. Basically, if the government had not given these relaxations that Bowman spoke about in Maharashtra, real estate was not viable as a segment in the residential business. Throughout the country, the recent observation is all the cities have seen rise in FSI. So from Pune to Bombay, Hyderabad anyway was infinite. I can clearly envisage an oversupply from existing projects, Santosh, because we are going to be building twice from the same development. Now, I'm concerned about that because there is no, organized data on the demand demographics and what will work and what will not work. So the developers are going through this huge risk. And then, of course, not to forget, while there was consolidation, and Shrikant and you spoke about it, I've also seen there are new entrants, Santosh. And then they make the mistake of what we did in the past. And then there is again consolidation exercise waiting 5 years down the road for us. It just, So how do we adapt our business to these cyclical changes is the key for us.
Very interesting, Sanjay. I think what you spoke about, the best practices with the most of the A grade or the listed developers which they followed, I think could be the best example for the next developers or next leaders to emerge in this industry. I think, as you rightly said, the industry is evolving, and there has been a lot of focus on product, on different segment of the real estate arena. So Shrikantji, what we spoke about is, there is a huge amount of demand coming into residential real estate. And, we also spoke about consolidation happening in the market. But in order to sustain this demand going forward, Shrikantji, what are some of the learnings which you will suggest to the emerging developers, especially while developing a project which is customer centric and which is basically accepted in the market?
So Santosh, as all of them have said in some form, Arvind has said, and Sanjay, and as also Bowman, the key where the market is changing, RERA has changed a lot of dynamics of the way the business used to happen in the past and before. Earlier, consumers, you could launch well before many of the permits, and there was a big play, that price was lower, and suddenly somebody could get a higher price afterwards, and then you didn't have a delivery time pressure, and you could wrong as long as you wanted. All those dynamics have changed. I think the new dynamics will be what Sanjay and Arvind alluded to, that you have to make what the customer likes, sell it, quickly close it, and be off of that project. That's the only way of making, either not passing all the costs and still making money, because in my experience, the fastest you close and whatever cost you close at is the lowest cost. There is no other way of getting that cost low. So this dynamic is going to change. What also is going to happen, Santosh, is what Sanjay alluded rightly. There's no demand in that sense, the study of demand. Like ORG would have studied on Coca-Cola or a soap or this or that. We don't have that. My suspect, all we talk about is supply, demand, and overhang. But my guess is that overhang of some developers, which is not accepted in the market, is going to last forever. It is not going to go off just because time has happened. So how are you nimble? How do you make something which the customer really likes and wants? And to foresee these changes, it's very, very difficult. Suppose the interest rate shoots up by 2-3% tomorrow morning. All the big size plans, once you pour the concrete, this product is not changeable. So nimbleness has to be one very, very key impact. Speed is a second key impact. A third, to be as close to the customer as you can on every touch point to really get those points inside and not to make stupid mistakes. That's the fourth part. Keeping your ego in check and making big things, which is very, very difficult. I'll give our own one example. In the Crescent Bay at 21st floor, we have a sky deck connecting 6 towers. We will never do it again. It's impossible to live with that in a way. And Bhuvan, you can imagine. I mean, it takes years and something happens to one tower, you're stuck with it. And 1,400 customers coming after you. So many of these grand ideas, they're very nice, but in the current legislative environment, you just have to drop those. So those are 4 or 5 things you need to be very think to really not make a big mistake.
Shall I try to have a go? Shall I try to
yes,
have a go?
Yes,
Please,
okay, I'll tell you. First of all, my first advice is don't come in, because half of you come in only for the money, right? You only see a lot of glitter and you try to come in over there. No one has told you about the pain that this industry has to go through, right? Secondly, if you have to come in, don't fit in. Don't try and do everything that Sanjay does or Arvind does or Srikanji does or I try to do. Don't try to do that. You have to come in with something new. So that is why when Mohit said he's doing something new, I mean, there is definitely, he's not coming in to be one of the run-of-the-mill developers, what I'm presuming at least, right? Third is definitely come in, and before you come in, be like Abhimanyu. I mean, don't be like Abhimanyu. Don't only come into the Chakravyuh, know your way out, okay? You have to have an exit plan for every project. That is financially, please think about a project, put in those, don't calculate your profit first calculate cost, come in on cost. Don't try and come in on the fat layer that one sees. Please understand P&L is one part, but reputation is a bigger thing going forward. It's only going to be people who are trusted, because when it's a home, I mean, you buy a shirt, you get cheated, you'll buy another shirt, but you buy a home, you get cheated. Chances are you're never buying another home. And finally, I tell people, we dwell too long on our mistakes. If you make a mistake, take it on the chin, move on. In life, you just got to take the hit and move on. Most of us just dwell on the mistake and then, go into throes of worry about it. And finally, once again, if you have to get into the business, make sure that you know or you have studied enough before coming in over here, because it's a very unforgiving business, and it could just finish you.
I think what Bhuvan said is spot on. Just add, my biggest worry is that we are in the early stages of what everyone's calling an upcycle. And in every upcycle, you have these excesses of all the bystanders wanting to come in, thinking that this is the gold rush and everyone should come in. And that's what spoils the industry. So it's better we don't, call it an upcycle. Let's just call it a recovery.
Exciting. And all the points are very relevant. I think these are some of the things which needs to be kept in mind while any new players coming into this industry. Bhuvan, this was again
I very quickly, we should not call price increases. We're only trying to catch up on cost increases.
Yes.
It's not a price increase. I can assure you.
Will that be accepted? That's my next question to
They should be accepted,
everyone.
considering how many have. There is still 3 lakh crore worth of projects stuck, Santosh.
Yeah.
And Swami Fund will tell you. And they're, by the way, only targeting last mile funding for affordable projects. So I'm not even counting the rest. So that should give enough indication to new entrants of what not to do and how competitive and local and difficult this business is. And you know, we often talk price increases, not price increase, Santosh. We're trying to catch up.
I agree with you. I agree with you because, after a long time, we have been able to bring back that glory and we have been able to focus on delivery. Majority of the developers were focusing on delivery. But when the impact of cost or the material cost started increasing, it was a huge impact on the developer. And, developer had to bond to increase their prices. But
also idle charges for construction workers during COVID of 2 years. So yes, we didn't have full construction worker man force, but half of them were at the park and they were paid.
Yeah, but Sanjay, in some of the market, some of the developers are still struggling because they have increased their prices and they have not been able to sell their product.
Yeah.
So that is big, kind of a differentiation. In some of the markets, there is an acceptability of the sales price, and in some few of the markets, there has not been. So many of the developers are still struggling.
Yes.
And that's again putting them back on some of the unstructured kind of a work environment, which is again pushing the industry back to that same
old style.
Were there, yes.
Yeah, I have witnessed some guaranteed returns for residential and commercial properties, which are basically, investment products. And, what if that doesn't get delivered on time? That could ruin the chances. So I think the incoming investors and developers should be careful.
Yeah. So Mohan, another question on the new Rent Act which has come in. So India, especially in the Indian residential real estate sector, the yield of the rental is really low, around 2%, 1.5% to 2%, as compared to 6%, 5 to 6% in the emerging market. Is this low yield a challenge for rental housing development across the country, and eventually getting it REIT in the residential asset segment?
Short answer to a long question is yes, obviously. But let me tell you the flip side, right? Change is what we have seen over the past, I would say, decade and more. And now the changes are taking place faster. It's only a matter of time before, like Europe or like any of the developed markets, we'll be able to see people being able to give their homes out on a daily rental or a weekly rental, like going to a, what's it called?
Airbnb.
Airbnbs, etc. of the world, right? That will kind of get your yields up. It's a matter of time when these things will happen. Should they happen, they'll be great. If they don't happen, then we'll still be, working towards trying to make other things happen in the real estate space. One is, I can tell you, Mumbai could be a lot more profitable as an investment if we just brought down the cost of the end product price. And it is possible. It is possible if we, quite honestly, the government takes up about 22 to 28% of my revenue, which comes from my consumer, as charges and taxes. And we've been kind of, I know Sanjay, you would be putting up through the organization, we put up through our organizations, all these letters to the government that they've got to keep on bringing down the cost, and they've got to make buying more friendly. Recently the stamp, that's the IGR of stamps, has actually allowed us to go ahead and work from our offices and register a document right there. Now you've got to bring a whole slew of such activities in, or steps in, that reduce the how do I say this, that make buying a lot more easy, so it becomes a lot more attractive. Today, even if I have the money, people aren't going out there and buying real estate. They'll go and buy shares and stocks, because all they have to do is call up their broker and say, hey, listen, this is the kind of things that I want to invest. And that guy has got a mindset, and he's kind of done it for you. And on your Demat account, you can see you got the shares right there. Zero hassle, right? You at least reduce the hassle for those who have the investment capability. Then you increase the yield for those who want to kind of use this as a investable asset. Even today, I think 40%, if I'm not wrong, of the Indian net wealth comes out of the real estate portfolio, other than gold, which let's say the middle income houses put most of their savings in cash and gold. 40% or 45% comes only out of the real estate assets. I'm not very conversant with the new rent act, quite honestly, but I can tell you, to make residential real estate, let's say, more lucrative, I would first work on making it more simple to acquire, to buy and to sell. Don't make it too complex. Try and get the taxation layers worked out. Why on earth do I have to pay 22% as capital gains tax on sale of real estate? Second, but why would I do that? Why would I go ahead and pay? Why is every single tax added on to only real estate purchases? Mumbai is getting a metro upgrade, so we pay 1% cess as part of the purchase cost. Already 5% is too high. We saw what the government could do with a 2% and 3%. There was a line outside the door for properties to be bought. I mean, and I think the one big thing that will change the way a buyer will think about it. And I used to tell people that around the world, if you bought a house, they gave you a lot of SOPs, because that kind of stoked so many industries to grow, 256 industries to be precise. Plus, it added to the economy. So they encourage you to buy a house by giving you income tax benefits. Now, I understand they give income tax benefits, but India is a wide country and Mumbai is a country by itself. So for people to buy in the city of Mumbai, and if you look at 42% of your recognized real estate, residential real estate comes out of Mumbai and MMR. For people to buy in Mumbai and MMR, you should give a higher tax rebate, or you should say that all the money that I pay as interest should actually get a set off in my income tax. Why not, right? You're growing the economy. So I would make it simple. I would make it more friendly. I would make it more attractive in terms of tax breaks, and of course reducing the price. And Indians will always be close to real estate. And after the pandemic, like most people have said, people have realized that money alone will not help. And real estate, I mean, every time there's an inflation, real estate has been the one biggest hedge against that real estate also. I mean, against inflation also. So people have realized this. We have already seen a little bit of flavor coming in. Let's just work towards making it a little better.
Yeah, but you don't see any change in the yield moving forward.
I told you there are a few things that one would have to see as change in terms of the usage of real estate today. I mean, in Mumbai, even today, if I have an apartment and I want to lease it out, I've got to speak to the society and tell them who's going to come and live out. Then they have a choice to say, married, not married. I mean, how does it really matter, right? So all these things will have to change. Yeah.
Understood. So Sanjay, Tata is known for its high level of trust with the customer. Especially this is related to customer. As the industry went through so many ups and downs over the last few years, what are some of the best practices that you feel you have maintained in order to keep the customer fully satisfied and invested in the brand?
Santosh, first of all, the customer's expectations from the Tata brand is significantly higher. And so that's one thing. And I think it would apply to some of the other reputed corporates as well. What instantly comes on the table is the trust, the transparency, and the governance. These three things comes immediately on the table, because that's what we are known for. Customers, while they've become quite well-informed and educated, and they do a lot of analysis before diving in, given the recent experience with some of the other developers, they do want the delivery, irrespective of the consequences that we go through. Now, if the government has not given us the occupancy certificate, in a recent judgment by Supreme Court, they have put the responsibility of getting the approvals on the government as a developer's responsibility, which we're not denying it. But suppose if it's a force majeure kind of a situation where I have delivered the property on time, I've applied on time, but the OC took 1 year to come, or we're being penalized. The customer's expectations are that you have to kind of take the ownership of that. So some of these areas are quite different than what we experienced earlier. In some places, the rise of consumerism has taken a priority in RERA courts. And I think it was very easy for such courts to take decisions biases towards customer because it's a consumer wave that is coming into the country. And I think a lot of precedents in the consumer courts have been set wrongly, Santosh.
Yeah.
And therefore, we have to correct those. So in short, I'm saying there are a lot of expectations which are expected and we have performed and lived up to, quality, etc., etc. But many expectations are difficult to sustain and justify, and we need to align the expectations of the customer also in a reverse way.
Sanjay. Shrikantji and Arvind, these two questions for you only. In our survey, around 55% of the populations who are now looking for houses are millennials or Gen Z, who are basically, keen to buy their own house. And, do you see the developers are doing anything specifically in order to attract these customers base, which is ever growing now? Shrikantji, you may go up. Yeah.
So Santosh, we do see the age of house buying has gone down. There is definitely things which have helped. Higher salaries, husband-wife working, mortgages available on combined income, and early decision making, and no liabilities of parents, which the earlier generation maybe have had, and no need to send money back home, etc., etc. So these are issues which help the buying age to go down. But the price and the buyer bracket we currently operate at, we don't see 25, 30-year-old, but there is a big market. If we get into affordable size, if Tata's or us or the panel here, I mean Mahindra, there is a huge market there. We don't operate there, but I'm sure a lot of millennials do go there. The millennial business types that we do get a lot, where there is that disposable income and willingness. So the ages have gone down, this for sure. Ages have gone down.
Okay. Arvind, anything you want to add?
Yeah, so firstly, that observation, isn't it wonderful? It speaks to the heart of the question you started with, saying, is residential real estate still relevant to our consumer? And of course it is. If your survey is finding that even 25 and 35-year-olds are actively considering buying a home. So it is very much, as Baman said earlier as well, a very core part of the Indian aspiration. Indian families aspire to own homes, and the home ownership rates are currently so low that there is a lot of runway still left. To make the product relevant to this generation, we do have to go back to the drawing board and think about what is relevant. So aspects like technology in the home. These are digital natives. So a home that embraces technology, that enables technology, is very important. We have found, and we have hung our hat quite strongly on this, sustainability is a very, very strong plank. We recently launched a project in Bangalore, which was India's first net zero energy homes. Received rave response. I mean, we sold 75% of that within 2 months. And honestly, we couldn't have predicted that it would have struck a chord with the consumer. But there are consumers who are looking for these kinds of specific offerings, green homes, smart homes, low maintenance homes, etc. So it's important to, going back to the fundamental theme of this panel and this conference, understand what the consumer wants. And this audience has very clear thoughts, has a clear voice in terms of what they're looking for and design products around that.
Okay, my final question to each one of you very quickly. What are the two things which you have been able to bring in your organization post the COVID, post the pandemic, in order to build the customer confidence? Very quickly, each one of you. Maybe start with Srikanji.
No, they're not two things and they're not related to COVID, but yes, quick handovers and faster construction. These are two things which we are trying to align our teams. I think there's some success we have, but there's a long way to go.
Sanjay?
One word, digital stroke technology.
So agility and technology for sure.
And
I think speed and technology.
Wow. Thank you. Thank you, everyone.
Santosh, hi, Santosh, is Pushkar. There are two questions that have come in on our Q&A chat box.
Yeah.
So if you would like to take them. One is with regards to balloon financing. Is it beneficial in the Indian market? And the second one is, how do we see tech adaptation happening at consumers' end towards home buying decision? Can we mitigate the tangibility factor to some extent through tech yet? Or tech is just another layer in the process today?
So maybe Sanjay, would you like to answer?
No, certainly, I mentioned about technology. We have used technology and digitization and improved our internal processes and systems as well as the customer experience. Really worked on that quite a bit. We gave a lot of emphasis on cash flow management during these difficult times. Our objective was to reduce cost, Santosh, because cost deprives our business substantially. So we are thinking of how you can quickly construct and monetize. So the energy is always on those, nothing else. I would say through CII, I would like to make an appeal. Ease of doing business, and if the government can give emphasis on cost of doing business in this country, we'll be very grateful.
Thank you, Sanjay. Just to summarize, it is the right design, right product, right corporate governance, financial discipline, focused on customers and delivery is the key success mantra for the real estate industry to grow. And with that, I want to thank each one of our esteemed panels. Thank you so much, Srikanji. Thank you so much, Bowman. Thank you, Sanjay, and thank you, Arvind, for attending this great event. Over to CII for the last session on the release of the report.
Thank you, guys. You should do much more of these. They're very, very enlightening. Thank you.
Bowman, I request if you can stay back for a minute along with Mr. Dutt and Mr. Subramaniam, please. We are releasing the report, the consumer sentiment survey. So I request if you could stay back for a couple of minutes for the video, please.
Sure.
Thank you very much to Santosh and all the eminent panelists. Thank you very much. Ladies and gentlemen, may I now request Mr. Prashant Thakur, the head research for ANAROCK and the senior director, to please take us through the CII ANAROCK consumer sentiment survey. Over to you, Prashant.
Thank you, Ashim, and a very good evening to all the attendees. In another couple of minutes, I'll just take you to the couple of findings that we have kind of unearthed through our consumer sentiment survey report. Just a second. So the last couple of years has definitely been, a roller coaster ride for the industry, where, not only real estate, but the entire economy suffered a lot. But what we have seen that real estate has shown its resilience, and kind of we are almost pre-pandemic level, not only in core market, but all of the markets that real estate is prominent. Ashim, can you share the slide? Yeah. Next slide, please. So our survey basically, was done on to understand what is the consumer pulse post the COVID, and also in the wake of this emerging turbulence that we are seeing in high inflationary environment. The good part that we kind of figured out that most of the respondent whom we surveyed, real estate is still a preferred asset class for them. So 59% of the respondents said that real estate is the asset class that they would like to invest in, which is kind of almost pre-COVID level. It was followed by stock market. Next slide, Ashim. One interesting part to note was that when we asked the millennials and Generation X about the purpose of the investment and saving that they are making right now, 56% of the millennials said that they are investing and saving with an intention to buy a real estate at certain point of time. So this, answers our question that this cycle is definitely looking upward, though we might face some kind of turbulence in short term because of this high inflation and the increasing interest cost. But there's a good chunk of millennials and Generation X who are saving a big chunk of their investment with an intention to buy real estate at certain stage of time. Next slide, Ashim. There has been a good mix of end user as well as investor. So the market still remains driven by end users, but what we are seeing is that a good mix of investor is coming. So what we see is a fine balance of end user and investor, which I think is good for the long-term structural growth of the industry. Unlike the past, we are not seeing that this market is dominated by investor speculator, but yes, the end user always keeps the kind of demand that we are seeing, and also the delivery on track. Next slide, Ashim. What also we figured out that the market still remained skewed towards ready to move in property, but we are seeing a gradual increase in the preference towards new launches. And this is based on the fact that now we see good quality grade A developers coming in the market. We have the assurance of RERA, where now people are equally confident in buying, under construction new launches, because they are now assured of a timely delivery in this new environment, which has been kind of boosted by the introduction of RERA in almost all the states. Next slide, Jim. And also interesting point to note is that while the share of affordable is coming down, we have seen that houses priced 1.5 CR and above is gaining traction. This also points out to the fact that post-COVID people are willing to buy a bigger and better houses, not only in terms of in good location, but preferring gated community which has a superior quality of construction and superior facilities of which enhances the value and the quality of living. Next slide, Ashim. One interesting trend, what we figured out during our survey was that there is a trend reversal. Pre-COVID, 52% of the respondents said that they would prefer 2 BHK, and 31% said that they would go for 3 BHK. During our current survey, this answer has reversed. Now 44% of the people are saying that they would like to go for a 3 BHK and a bigger houses, while 38% have said that they would go for a 2 BHK house. So in a nutshell, every response that we got during a survey is pointing towards buyer's preference towards a bigger and better house. Next slide, Ashim. And when we asked the respondent about their preferred location, so in spite of school reopening and offices resuming their normal occupancy, the preference to buy a house on the periphery still remains high. And then it kind of again sums up the fact that bigger and better houses in an expansive location is the preferred destination for the home buyers. Next slide, please. We also tried to touch upon few of the burning issues, regarding inflation and interest rate. So yes, 61% of the respondents said that high inflationary environment has definitely caused some kind of erosion in their disposable income, while 34% of the respondent felt that the impact has been very moderate. Next slide, Ashim. So this is the question where, I think everybody is trying to find the answer to that. What would be that level of home loan rate or interest rate beyond which the buyers would kind of hold their purchasing decision? So 93% of the respondents said that if the home loan rate breaches 9.5%, then there might be some kind of demand deferment from their side. While, if it remains below 8.5, or let's say between 8.5 to 9, the impact would be moderate. So I think anything beyond 9.5 would pose some challenge. But if we look at the entire outcome that has come, it is all pointing towards a short-term challenge, but the long-term recovery of the industry remains intact. So I think with this, I would conclude my finding. The entire report would be available on our website for download. Thank you. Over to you, Ashim.
Thank you. Thank you very much, Prashant. Ladies and gentlemen, we had an engaging discussion today with all our esteemed panelists and with Mohit doing a fireside chat with Anuj. So with this, we end today's session. The CII ANAROCK report will be emailed to all the participants. Thank you very much for participating. See you in the next program of CII ANAROCK. Thank you very much.
Thank you.